So I think by now we have a very large amount of data drawing from a lot of countries that illustrates that people who basically have no access to financial services, credit, asset management, even efficient mobile transactions, are are a group of people, and they're numerous, who can be served with digital tools. And at least a subset of those people are served with a digital tools. It's artificial intelligence. So, for example, in credit, meaning borrowing money, there are a lot of small businesses and households who have no, offline record, right? They don't own a house, they don't have collateral, they haven't dealt with a bank, they may not even have a bank account. But in the world of digital payments and mobile and social media, people basically accumulate a track record. They become less anonymous. And then the AI tools allow the supplier of services, if they use them properly, to assess and price credit and give them the opportunity to borrow. And especially for businesses, this gives them the opportunity to invest in whatever it is they're doing. So this developed first and fastest in China, and the reason for that is interesting. In China, the mobile payment system spread so fast that there were two giants in that field, Tencent or WeChat Pay on the one side, and then Ant Financial, which came out of Alibaba, on the other side. So they already had the data, and they had the skills to use the data with artificial intelligence, learning algorithms. But then it spread to other countries. And so India came along. Kenya has had an impressive version of a payment system in M-Pesa for a long time. But the AI will turbocharge that, once we get the data. The other thing, just to mention quickly, is what was just mentioned in here is you can think of this from an economic point of view as using data to close big informational gaps, right? I'm a lender, I don't know a thing about you, right? I can't lend money to you if I don't know anything about you. And so we close that informational gap. But the other really important point is you can only do this if you can share and pool data, okay? Unless somebody has it all, then they have to share and pool it, because data in silos, one over here and one over here, you can't use it using an AI tool. And that's why the regulators are important, because once you start sharing data, then you need rules for how to share the data. What are your obligations? I'll give you an example. In India, which has now a very well-developed, not only mobile payment system, but a system that allows people to share data. And the way it works is the data is not centralized. It's, this bank has some of it, this wallet has another part of it, etc. And so what they do is you join the unified payments interface voluntarily, but everybody has to join eventually. And then if one entity in that is considering giving me a loan, then they need data from other parts of the system. That data can't move unless I say it's okay. So that's step one. But it's the second step that's really important. If I say yes, the data can move, meaning my data, from all the places it's scattered, then all the entities that have some of my data are legally required to send it to the place that's considering me for credit. And so I guess what I'm trying to say is, lying behind the use of AI is some considerable creative work in designing data sharing mechanisms that protect the consumer on the one hand, but allow the data pooling that you need to let the AI work. There's no question that the world is a less easy place. The global economy is a less easy place to access than it used to be, and that's because in part the tariffs in the United States, it's part trade protectionism that kind of increased, as we came out of the pandemic. And I don't know, and it's part, there's a lot of competition, okay? On the flip side, there's some good news, right? So, for example, two pieces of good news. One, China's at a high enough income level that they're not going to compete anymore in certain areas, right, that are labor intensive and whatnot. So that's good. And the second piece of good news is if in the old days, like in the old global economy, the really open one, everybody would go to the place that they thought was the most efficient place to go. So now you fast forward to today, and as I said today, nobody's doing that anymore, right? You could get caught, either because some shock hits that source. So all of the architects of global supply chains are diversifying their sourcing. And so countries that have found it difficult to enter in various sectors into these global supply chains will find it easier now. Because if you stick up your hand and you become a plausible destination for various kinds of economic activity, it's easier now. And when I was chairing a growth commission, there are many people from various parts of the world, Latin America and Africa, said it's hard to compete with China, right? Even if China weren't kind of graduating to higher income